This podcast is sponsored by MediaOcean, the OG of ad tech. MediaOcean is a big open market supporter, and that goes both for this pod and the industry. Since 1967, MediaOcean has brought the ecosystem together with an open and interoperable platform that's free from the bias of big tech. And as omnichannel advertising becomes a reality, MediaOcean is bringing AI and automation to bear across the supply chain. For those of you on an entrepreneurial journey, you'll know you've made it when you get your first request to integrate with Prisma. Learn more at MediaOcean.com/pod. And thanks again to MediaOcean for showing open market love.
Welcome to Open Market, a podcast about building companies in the advertising industry. I'm Joe Zappa, and I'm joined by Eric Franchi. How's it going, Eric?
It's going well. How you doing, Joe?
I'm doing great. Eric, today I'm going to pick your brain about something that I think so many entrepreneurs and business leaders in ad tech think about, but something where there isn't wisdom sort of publicly documented. So usually people have to have individual conversations with people like you to get this knowledge, and today you're going to share it with the public. How do you take an ad tech company from 1 million in revenue to 10 million? Shall I jump in with some questions?
Go for it.
All right. So first question, what does the team look like? Paint the picture for us. So at 1 million, what does the company look like and how will it change to get from 1 to 10?
This is one of my favorite topics, and I agree that this is a topic that is not well covered. And it's an area that I spend the majority of the time when we've got an early stage fund, and this is like the sweet spot for our early stage fund as companies progress. So this is an area where I sort of would love to talk about. In a previous pod, we talked about 0 to 1. 0 to 1 meaning you've got 2 founders, and maybe you've got a small team of engineers, maybe you've offshored it. So this is a little bit of sequentially what happens next. At 0, you've got nothing. You've got team, you've got product, and you're going to go to market. The real first line of demarcation from a VC perspective might be like, 500 million or so in revenue, which is 40, 50 MRR, 500 ARR. But, I think that the real graduation point for, maybe it's like 1/3 to 1/2 of startups is getting to $1 million. Difference between 0 and $1 million, there's not much difference, to be honest with you. We talked about there's, the proto founding team is, there's a builder and there's a seller. The builder is building, and it's sort of largely a team that's supporting the builder, product and eng, and it's mostly founder-led sales. So your selling founder is doing a lot of selling, and everything else from a commercialization perspective. At the $1 million mark, you're probably 10 to 15 people. You probably are product and eng heavy, and again, it's founder-led sales. So, you've probably raised a friends and family, you've probably raised a pre-seed or seed, so you've got some money in the bank. And at 1 million ARR or the equivalent in usage-based revenue, from my perspective, you probably have a product that works in the market. You've got product market fit. You've got customers that are buying, you've got customers that you're retaining, you're winning business, you've got good logos, you're basically primed to hit the market, and take this from 1 to 10.
Yeah, when I talk to companies in this stage, or I often talk to people who are just starting their ad tech companies, and this is what I'll tell them, that in the beginning, it's going to be founder-led sales. So from a go-to-market perspective, you are just trying to build some buzz, have people know who you are, get in front of the people who matter, and then you're going to work relationships, right? You might go to a couple events. You don't need to sponsor them. You're not going to have the money to buy a $100,000 event sponsorship. So you're just going to a few events that matter and then working the proverbial phones, which nowadays probably means LinkedIn, Twitter, email, and so on.
There's another point here that's really important, is that you have to do sales as a founder, right? The founder-led sales, because you need to understand the challenges in the market that you're building a product to address. You need to spend a lot of time with customers to really dig in and help them understand your product. Like, this is as much setting yourself up for that next stage as it is just kind of being in market and doing business development. This is true learning. This is true, like trying to get to product market fit as quickly as possible.
And in the beginning, you start with a thesis about who the audience is, who the customer is, what they're going to value about the product, and so on. And I think 0 to 1 is really validating that thesis. I was talking to someone earlier today, right? And they haven't really started selling it. They tried an idea, it didn't work. Now they're pivoting. And it's like, okay, are you selling to brands, agencies, or publishers? It's not sure. It's like, okay, well, I think it could be this for agencies, but they're asking about marketing. And it's like, before we spend any sort of money on marketing, we need to validate who that customer is so we know who we're talking to. Now, at the $1 million stage, as you said, you probably have 5, 10 customers, whatever it is. So you have a representative sample of who is this person I'm trying to reach. And that's the point at which, from a sales perspective, you can maybe start training other sellers on your customer. And from a marketing perspective, you can hire someone who's going to go create buzz, and they'll have a better understanding of whom am I actually speaking to. What you definitely don't want to do is, which I've seen before and was a part of earlier in my marketing days, was when people would come to me and be like, we're not catching on. Should we do marketing? And it's like, that's not the time when you want to spend 5 to 10K per month on marketing. Like, marketing, making buzz is probably not going to help you get those like first 2 customers, at least not at the price point it's going to cost to hire an external person. You want to get loud as an individual, but you don't necessarily want to go try to set up a systematic marketing or go-to-market approach before you know which customer is going to be the foundation of that system. That said, let's say you've gotten to that $1 million mark, as is the basis of the thought experiment we're doing here. How do you then think, Eric, about professionalizing the sales and marketing approach?
Yeah, I was thinking about this week, and I'm getting back in a groove on X. And one of the things that I used to use X for was, kind of like testing ideas and putting thoughts out there. So I'm paraphrasing my own tweet, which is, kind of semi-douchey, but this is the idea, which is basically you get from 1 to 3 to 10, right? You're basically looking at triple twice with strong VPs. And like, for me, the answer to the question and the most important thing that you should be thinking about is attracting the right VPs from both a sales and marketing perspective, as well as, kind of the product and everything else from a company perspective. The right VPs take you from 1 to 3 to 10. And you as a CEO or founder need to understand exactly how to empower and recruit and, and sort of onboard those VPs. But the answer is, at this point, you've done the work to validate the need in the market. You've done the work to build a product. You've done the work to attract great logos. You've done the work to figure out, how to retain and everything like that. Now it's time to bring in some people that can give you leverage and really take this thing to the next level, because they've been there before. They're super talented. They're subject matter expertise, where you've got, like the experience and the scars from a commercialization perspective to hand them the baton, so to speak.
So let's focus on sales specifically. I'm assuming if you're thinking about your first non-founder sales or marketing hire, you're going to start with sales probably. And though you can tell me if I'm wrong. And do you go out and hire a VP of sales right away, or do you hire a couple SDRs and then build up to that?
Yeah, it's the latter. And you're right. The way I'm oriented, I'm very much sales oriented, right? And this is interesting because you're marketing oriented. To me, it's starting to get more people in the marketplace. So I think step 0.5 would be to hire a couple of sellers, have them working for you, have them start to take what you've built in terms of understanding who the ideal customer is, the raw sell, the go-to-market, and have them start working with you. Perhaps it's an SDR and an AE. I like the idea of just hiring an AE or 2 that can just start to, hit the ground running, do some, basic blocking and tackling, and get you in front of more customers and add some leverage there. Ultimately, I think, you'll have enough learnings of what non-founder-led sales looks like, and, the beginnings of what, I think a more formalized sales motion should look like, that ultimately when the VP comes in, you're just pouring gasoline on, what is already a small fire.
And at what point do you hire those AEs? I'm imagining it has to be a point at which the founder has already made, let's say, a handful of sales, and they
Yeah.
feel like they have a good understanding of who that customer really is, so that they can equip the more junior salespeople with that persona, and they can sort of go look for it in market and maybe bring some of their own contacts.
I like 1 million as the demarcation line, depending on the nature of your business and exactly what the cost is. This is going to be an enterprise sale. You've got 5, you've got 10, you've got 15 customers. That's the mark at which I would begin to start scaling sales. And then, relatively quickly thereafter, you're bringing in a VP that, can again add leverage.
Right. So that's what you're doing from a sales perspective. You get to 1 million. Around that time, you're going to hire a couple AEs. You're going to train them on your customer. They're going to go out and start selling. Once you have those AEs successful and you're starting to build out a sales operation, then it might be time to bring on a VP of sales to take things to the next level.
And those AEs are benefiting from you having done the work to really understand who the ideal customer is for the product at this point. So they're not just picking up the phone book and dialing randomly. They understand who is the best type of customer, at least initially for V1 or V2 of the product, and doing targeted outreach.
Now, I think what happens at a certain point, so let's say 1 million, 2 million, wherever, is the salespeople, they're working their asses off because they have no air cover from marketing. Because at this point, the company hasn't really done any official marketing, maybe, right? They might have an advisor or something who's advising on PR and stuff like that. But mostly the salespeople are following the path of the founder and they're hustling, right? They're going to events, they're trying to network online, whatever. They're annoying everyone on LinkedIn. So then I think at that point, when sales is starting to hum a little bit and you have a sales operation and you have some money coming in and some funding, which we'll touch more on the funding point in a bit, that's when you maybe bring on a first serious marketing resource. And you can tell me what you think about that. What I would say about it is you can go two ways here. You're not going to have the money for like a really serious full-time marketing person, probably. Like I'm assuming at this stage, you're not going to go out and hire, a VP of marketing. But that leaves you with two options. One is you can hire a junior person full-time. If you hire that junior person, I think the issue is the CEO probably needs to understand marketing pretty well. Like they need to have a strategy in mind and then just go hire someone who's a good writer and understands the space or something like that to go execute it, create content, create some buzz. If you don't have that, if the CEO doesn't really get marketing or neither of the founders does, then I think you could be better off hiring an external resource who's going to be hands-on and do a lot of deliverables. Like they have to be creating stuff. They can't just be giving you advice, but who also does have the experience to develop a strategy. Because what you don't want to do, and I see a lot of this in ad tech at this stage, is hire a junior person, expect them to figure out marketing from the ground up, even though they have no experience suggesting that's a thing they know how to do and no real philosophy on how marketing works. They're just a tactician. And then be like, why hasn't this marketing manager I hired for 100K a year or 80K a year solved our marketing problems? What do you think about that?
I think in between the sales hires and the marketing hire is another key hire that's in this little family, and that's customer success, right? Because you want your AEs out there selling, and then you want the customers to be very, very happy and don't cancel and renew and buy more products and all that. So I think it's we're building out sales function, we're building out as a fast follow or simultaneously the customer success function, and then yes, to your point, now that the engine is humming, we're thinking about marketing as well. I've seen many companies, and I've made this mistake in the past from my own experience, do exactly what you just said, which is hire a junior person that can get stuff done, but isn't necessarily the one that's strategic and thinking about things from a 30,000 foot view, and has sort of like done it before and build brands and oversee content, events, all of that stuff. And what ends up happening is, you as a CEO end up burning a lot of cycles trying to figure out exactly what this person should do. Sales starts to get frustrated because you're spending a lot of time on marketing and it's not going anywhere and they're not getting your help. And, it ends up being a real painful situation for all. So I err on the ideal is you find an individual contributor who is perhaps a manager or, a director level person that is just ready for the step up and you just bring them in and you throw it to them. I've seen, the right type of people able to step up and say, okay, I've seen this before, as part of a team, I've got the framework, I've got the thoughts, and I'm going to go in and do this. If you cannot find said unicorn, they're very, very difficult to find, they're very, very difficult to hire, then I think your idea of, just having sharp, no pun, like external assistance, that can help you strategically, and then, a doer internally that's got the ability to grow is the second best scenario and probably the more realistic scenario.
I'm glad you said the unicorn thing because I was about to hit you with my first. Let me gently push back on that. That's what I see every startup CEO at this level do is they're like, I am going to be the one to find someone who's basically ready to be a marketing executive, but will cost me a fraction of that price, right? And so they go out and they hire the marketing manager, and that person may one day be a CMO, or they might not. They could be very tactical, right? Not everyone is like a big picture strategic thinker. I'm going to create the story. I'm going to put together the matrix and figure out like how we're going to grow this company type of marketer. There are a lot of people who are just like really good at writing white papers, or they're really good at media relations. And that is really what you're trying to discern for, is just making sure that when you're putting together that initial marketing operation, someone in the company, which could be the founder or could be hired help, sees the big picture and has a vision for how marketing is going to help get the company from A to B. But I think we're pretty much on the same page on that. So you have sales, customer success, and marketing. The only other thing I'll say about this, and then maybe we move on to the funding issue, is I see a lot of companies, maybe not necessarily at the 1 million level, but like between 1 and 10, get stuck with sales and marketing. And what I mean by that is they have a few salespeople who are experienced and who know the company and definitely have made some sales, but the marketing function and the brand are pretty much anemic. And they've really gotten to wherever they're at by just like hustling. They're basically running the 0 to 1 founder-led sales playbook with a couple extra people also running that playbook. So I think a lot of companies run into the issue of failing to fully professionalize, or maybe moving to like 1B, but not like 2. Do you know what I'm saying? And have you seen that kind of thing?
I know exactly what you're saying, and I experienced it firsthand. And that's where that, again, that expo, I was like, it should feel like magic for the founder when they get the right VPs, and I was thinking about sales, customer success, marketing, product in place. You can only brute force the founder-led sale so much, and then everything starts to break. So this is very much about a talent thing. And that's where, again, I advocate for some of this, more senior level talent, particularly on the sales side, to come first. The other mistake that I see companies, again, in that betweener stage, right? They've hit the $1 million mark. They're trying as hard as they can to get to the next level is they don't invest in marketing at all. And they're very much, hey, we are a product focused company. We're, spending a lot of time with customers. And I think that's great. But ultimately, you need the air cover. Ultimately, you need people to be aware of you, that you're not knocking on the doors of, or have your team contacting, or just giving them the support to when they make that initial contact. Oh yeah, I've heard of you. I've seen the posts, all the stuff that we've talked about on previous episodes. So I think the other pitfall is not investing in marketing at the right time.
Yeah, I think a lot of companies hit a wall for that reason. And that wall might be 2 million, 5 million. It could even be a little past 10 million. You just get stuck and you're there for years and you're like, why can't we grow past this point? And it could be a market problem also. It could be like you're just in a business that isn't that big, but otherwise it's usually a marketing and sales professionalization problem.
Yeah, I'm making a lot of assumptions here. I'm making the assumption that you built a good product that works, that delivers ROI for customers. I'm assuming you're in the right market. You're in retail media or CTV or identity, and you're not building a commoditized, undifferentiated DSP or SSP. Like the assumptions are pretty clear on this one. And you are going from a founder-led sale. You're going from zero is an experiment, one is a product, 10 is a company. And from 1 to 10, like you are building a proper sales engine, you're building a proper marketing engine, you're building a proper CS function. All of that stuff is happening and it requires additional capital.
Exactly. Good transition, because I think a lot of people will be hearing this, especially entrepreneurs, and they'll be like, well, that's freaking great, Joe and Eric. You're telling me to go find superb people. Like what a brilliant idea. How do I afford them? What can I offer them or should I offer them? So let's talk about that. You hit the $1 million mark. I think we're assuming this is a venture-backed company. So where are you from a funding standpoint? And what sort of funds do you need to go out and make these hires? And maybe we can even get into the specifics of, what are you paying these people?
Yeah, we're going to assume that this is a venture-backed company. We're going to assume that you've raised a couple $1 million-ish to get to this point, which is some sort of combination of like a friends and family and pre-seed at like 500 to a million, and a proper seed that is $1 million to 2 million, something like that, right? I choose the 1 million ARR mark, or the equivalent, specifically because that is in classic B2B enterprise venture capital Series A territory. So at this point, like if you have a fast growing startup that has hit 1 million ARR or the equivalent, you've got great gross margins, you've got great metrics across the board in terms of retaining, you've got great customer logos. Again, these are all assumptions. No one is going to be perfect at this stuff. You are in territory to go out and raise a Series A. Typical Series A is $5 to $15 million. $5 to $15 million. You start to build a plan that gets your company from this 10 to 15 of a product-led organization to 45, 50 people that are scaled sales, marketing, product, technology organization. So that's basically the playbook. That's the framework. It's very hard to do, particularly more recently. The Series A and B market has been a lot weaker and softer than it was in 2020, 21, but the best companies are getting there.
You mentioned good gross margins, good metrics. Could you educate me in the audience a bit on what you're looking for there as a VC? Like what says to you, oh yeah, this company's at about $1 million in revenue and their metrics indicate they're a good candidate for a Series A investment?
Top line to me is number one. So, you look for a company that is best in class is 3x year over year. So the ideal, they started, from zero, raised a little bit of money, got to 20, 30 MRR, end of the year, 300-ish ARR. Next year, they, figured it out. They hit $1 million ARR, right? So I see that. I'm like, okay, this company's doing well. I also see some companies that get there in a year or less. So, for me, the validation of, is this a product that has sufficient product market fit that people are buying it, is you hit $1 million, you did it in a couple of years, you sort of kind of 3xing year-over-year growth. Gross margin is going to be dependent on the nature of the business. For a software sale, you're talking about gross margins north of 80%, and net revenue retention of north of 100%.
So you go out, you raise that, let's say $10 million. What are you putting it toward? Obviously, part of that is going to be those sales and marketing and customer success hires we were talking about. So talk a bit more about where you're allocating the funds and what it's going to look like to hire, let's say, a VP of sales at this stage, like what you're offering them.
Yeah, I mean, at this point, if you raised your Series A and you have those key hires in place, this is the time where you're probably best suited to attract them if you ever are. you probably had, a lead investor that's notable that led the round. You got some good press. In that press, you highlighted, all the great customers that you have. Like that's what it's going to take. Basically, and this is what, I think you asked me this on X, which is what does it take to attract those people? What it takes to attract those people is the same thing that it took to attract a Series A investor, which is you've got a product that works, that delivers ROI. You've got, great customers. That's the composition of that million or so ARR. You're in the right market, right? You grew fast such that there's demand for this thing. And the, sort of TAM is really attractive as well. And you got a little bit of buzz. So that is what attracts investors. That's what attracts hires. Simple as that.
Yeah, you're starting to build a brand, right? You're building a reputation at the very least, and that's gonna, based on your customers, based on your vision, and investors and employees are looking at the same thing. They're looking at upside, right? Which you're going to attract a different kind of person to be a VP of sales at this kind of startup versus, someone who could take that same job at a much more established company. So they're going to be someone with a higher risk profile or higher tolerance for risk. And then what are you paying that person? Like, what are you typically paying a VP of sales for this kind of company?
So it's some combination of base plus bonus that gets that person to, over 300K in terms of total take home and with an attractive equity package.
Right. So,
they're going to be making less than at a FANG. That's for sure. And they're doing this because they love startups, because they, see the vision, because, they want to be part of a small team, and, they see the value and the potential equity.
Yeah, they're going to have a base that's a fraction of that. They're going to obviously get some bonuses or commissions, and then they're going to have, what kind of equity, like a range, are we talking about at this stage?
That is, the earlier the employee, the higher the percentage of, the business that, they'll receive in options. For most startups, this is going to be initial kind of VP hires. They'll have a point or two of equity.
Yeah, that makes sense. These are the secrets that people need to know, Eric.
Yeah, no, I got you. I'm also a big fan of, at this stage, setting up comp plans that reward AEs and sales leadership for, ridiculous outperformance and creating a path for that. And this is maybe more of a like $10 million company plan, because you need to have like the experienced VP of sales to implement this type of stuff. But you want your salespeople, you want your sales leadership making more money than anybody in the company, including the CEO. Because if that's happening, that means you're outperforming from a revenue perspective, and revenue at this stage is gonna solve all. So, big fan of commission and bonus approaches that heavily incentivize sales, and then obviously bonus approaches, for the rest of the company that's tied to that stuff. So we're all marching in the same direction.
Something you wrote on X, as you've referenced, is that these VP hires, VP sales, customer success, marketing, product, that they should feel like magic. Can you talk a bit more about what that means and maybe about your own experience with those kinds of hires?
Yeah. If you're a founder who is just brute forcing it from a sales perspective, is trying to do whatever you can with zero marketing skills and training to, do a little bit, for marketing to give the company and yourself air cover. Imagine getting someone that's awesome and has done it before and knows how to, build all of these plans and processes and motions that you just don't know because you're just a startup founder. Imagine them just coming in and bringing all of this knowledge, all these capabilities, and you've got the capital to put to work to support them from a hiring and from a planning perspective. It should feel like, oh my God, why haven't I been doing this since day zero? Well, you haven't been doing this because you have the capital, the product, and everything like that. But it should feel like it's some sort of combination of like the sky is opening and a weight being lifted off your shoulders, and it's a brand new day, and we're going to go out and, rule the world. That's, to me, what that hire should feel like. If it doesn't feel like that, I question if, you brought on the caliber that I'm talking about. It should feel awesome. And your job should get so much easier. And all of a sudden, you can devote your time and your cycles to things that are super important for the company, such as, focusing on finance, focusing on working with your investors, focusing on strategic planning, all of that stuff.
Yeah, that was something we haven't touched on a lot, which is how does the role of the CEO evolve at and beyond this stage? So from 1 to 10 million as you're making all these hires and all this progress.
I would say you go from being in the business to being on the business, right? Like, you're not just, spending all of your time just, triaging sales and product and customer service, everything like that. You've now, started to build out a team that's doing that for you. So you're starting to observe that. You're starting to, I think, look top down, whereas before you were just in it and you were grinding it out. So I would say that that's probably the pithiest and kind of simplest way to characterize it, which is you're starting to work on the business. You've, again, in our proto example, you've raised a Series A. You've got board members. You've got quarterly board meetings. You've got KPIs that you as a CEO are being held to. So, again, you're sort of ensuring that everybody's moving in the right direction such that, you hit those KPIs and you set yourself up for, not only sort of kind of, very productive, healthy conversations that are more strategic at the board level, but you're setting yourself up for, tripling, getting where we want to get in terms of 1 to 3 to 10. You are becoming more of a leader, right? You're 10 to 15 people. Everybody's just, we're just a startup, right? We're all working. We're all trying to get this thing to, to validation. Hiring another 40 people. They're joining because of you. They're joining because of what you built. They're joining, from, sort of the standpoint of your strategic direction. So you're getting probably a lot more involved in hiring. You're getting a lot more involved in internal communication. You're needing to up level it and you're spending less and less time. This is not 100% for the better. You're spending less and less time in market and talking to customers because you're growing and scaling an organization.
Yeah, less of a doer, more of a manager, strategic thinker, and recruiter, right? Because it's the team at that point and beyond that's implementing. So one of the most important things you can do until you're outsourcing that function, which is much later, is putting together the ideal team.
Yeah, that's hard to do. I mean, the number one mistake CEOs make at this level is they don't know how to hire because nobody's taught them how to hire. And again, bringing in the right investors and people around you. And, I'd advocate for, building a people function, as soon as possible at this stage will allow you to make less of those mistakes along the way. You're never going to be perfect at hiring. You're always going to just, have some percentage that you didn't get right for whatever reason, because people are imperfect and you're imperfect and everything changes and it's culture and fit and everything like that. But if you can start to move the needle ever so more in your favor when it comes to hiring, there's a compounding effect there.
And we're going to do a deeper dive in another episode on hiring. So we'll get really into that. I also wanted to ask you about your experience doing this. So at Undertone, what was going from 1 to 10 like, and how did you make some of those first key senior hires?
Undertone was in a different time. It was 2002. It was a time where there was far less competition. It was a time where the ad network model was, in its old golden age. There was low barriers of entry. So we were able to, and I was looking back to try to find some numbers, and I wasn't able, I didn't have enough time to do it. But we were able to go from 1 to 10 very, very quickly. We had pivoted from a services business, an agency, and just started taking this thing that we figured out and scaling it. So I think we hit 10 million within a couple of years. And it was brute force. And this was, again, like big mistake that I try to make other people not make. Nobody taught us anything. And the information access at that time was, nowhere compared to what it is now. There was no X you could interact with and read from. There were no, VCs and founders like publicly putting their stuff out there. This was like pre-blog. So it was a lot of just like, fighting in the dark. So what we did was we just hired people like us, people that, had like ad network backgrounds and digital media sales backgrounds, and tried to throw as many salespeople at what we saw was a real opportunity. And, we would just like hire people from competitive companies, and it would never work. it just like, we had no idea that it needed to be like fit for our product, fit for our culture, just like being good managers. We just like brute forced our way through it.
Yeah, well, I look forward to asking more about the hiring thing. I'm going to leave the deep dive on that for another day. I do think one of the most common mistakes is you have a startup and you're like, let's go get someone from an enterprise company, like someone who has worked at like a super serious operation and is like a real corporate person, and let's like plug them in here so that we could go from like startup to serious corporation. And my impression, also having worked with these sorts of people in my business, is it's just like a very different attitude. And, you're used to having a person who's specialized to do every little thing. And the first thought is, let me go just find someone who's done this at a much, much higher level. But if it's too far removed, it doesn't work.
Yeah, I try not to speak in absolutes because I've just been humbled enough over the years. But hiring the person that's done this at a FANG company and for somehow convincing them to join your early stage startup when they've don't have startup experience and they've worked at some of these large organizations and are used to that pace and that process, oftentimes can be a real mistake.
Okay. I think that's pretty much it. Do we want to summarize it? I think one point is that the difference between 0 to 1 and 1 to 10 is you have to professionalize the go-to-market operation. You're going to evolve from founder-led sales to finding sales, customer success, and marketing leaders, probably in that order in terms of sales, CS, then marketing. When you hire a marketing person, you want to be sure that someone in the company has a vision for marketing. So you're not just hiring a tactician and then expecting them to create and implement a marketing strategy. From a finance standpoint, around 1 million ARR or 1 million revenue, you're going to be able to go raise a Series A, which is probably going to be $5 to $15 million. You want strong metrics, strong growth. Obviously, if you're crawling your way to 1 million, it's going to be a lot harder. The company that's usually going to succeed with that would be, ideally tripling year over year or showing fast growth. Anything else?
We've intentionally just focused on the sales and marketing and commercial side of things because that's what this podcast is all about. This is a completely different conversation where we're talking about technology and product. So just wanted to acknowledge that this is about growth, right? And growth oftentimes is connected to, or always connected to revenue and the activities that drive revenue. But no, I think that's the basic framework. And not every company gets there. Like, I don't know what the percentage is in terms of graduation from 0 to 1 to 10 to 50 to 100. There was some data years ago that, it was a single digit percentage of companies, ever reach the $100 million mark. Also, this could be another conversation for another episode. At, 10 with great growth, you could be in a position to have like a really good outcome. At 20 with great growth, we've seen in recent times, like Habo, have an awesome outcome. So you're starting to get into the range where, in the right market, right strategic fit, the right metrics, the right customers, you're starting to push into the category of a potential, 50 to $100 million plus outcome for you as a company.
Yeah, and that's all about the category and the growth and the upside potential, right? Because I think there are a lot of other companies that they hang out at that, $10 to $15 million mark for a long time. And that's probably, again, it could be the way they're approaching growth, but it could also just be they're not in one of those hot markets, right? Like data clean rooms, great market right now, hot thing. Yeah. People are big companies like LiveRamp are trying to solve that problem. Whereas there are other markets that just aren't like that. Also, great point about the technology and product piece. And it would be great at some point when we start having guests on to have a guest who's been, a CTO or a CPO, and they could talk about the product and technology side of that equation and how that evolves from, 0 to 1 and 1 to 10 and beyond.
It's a great idea.
Cool. Well, let's call it for now. Thanks, Eric.
Awesome. Thanks, Joe. See you next week, everybody.